Our race yesterday.
It was a disappointing performance by the Australian market, a fall of 0.4% when the US was up by 1.3%. And we know that in the morning the Australia looks to the US for a lead, but in the afternoon Australia looks to China for a lead. And you can see that the market on the intraday graphs is really a tale of two halves. Before 12 p.m. where we took our lead from the US, and after 12 p.m. when we took our lead from China. Now our market performance was quite disappointing given that we did see Korea ending higher and Japan also ending higher on the day. And if we have a look at these two markets, they have a much heavier weighting to the technology sector, so they tend to take heavy leads from the Nasdaq or the US market. Compare that to the Australian share market, where the materials and the energy sector makes up 35% of our market, and the financial sector makes up the another 35%. That's 70% of our market, which is seen to have links with China. And if we have a look at the Shanghai Composite, very much reacting to the news that we've seen a reserve requirement hike of 0.5%. So if we have a look at the Shanghai Composite, down by 0.6%, the Hang Seng Index down by 0.3%. So not surprising to see most sectors in Australia coming under pressure. There's two exceptions to that, the telecom sector, which is seen as a defensive play, and the property sector doing quite well today. So altogether, disappointing performance on the Australian share market. We did see most stocks trading downwards. So if we have a look, for every 4 stocks that rose, we saw 6 stocks falling on the day, and disappointing given the positive lead from Wall Street and also Korea and Japan trading higher.
The bottom of that trend?
I guess Michael's views reflecting Charlie Aiken yesterday, who did call the bottom of this correction, saying that 4477 is a very strong support level. But for most traders and technical analysts out there, I guess it's not about predicting where the market's going to go, but waiting to see what trend emerges. And at the moment, that downtrend very much in place. As you mentioned, James, I usually do bring this chart up, and this is what it looks like. And you can see that that line hasn't been broken. We do have to move through just over 4,600 points first, but also if you have a look at some of the longer-term trend indicators like the 200-day moving average, what's still a fair way away from the market. 4731 points is where the 200-day moving average is, and then the 100-day and the 50-day are above those points at the moment. So traders are waiting. It does look like good value at these levels, but of course without having a crystal ball, it's really hard to see, and most traders will be jumping in after we see that downtrend being broken.
David, points of interest that a lot of people had been waiting for, and it's certainly talking to people after the speech by Governor Glenn Stevens certainly helped to move market. Seems a lot of people now post that speech suggesting those July CPI numbers, well, we always knowing they were going to be important, but August, ANZ now tipping August to see a rate hike. What did you make of the comments?
It does look like Glenn Stevens was looking for a repricing of the chance of an interest rate hike over the next couple of months, and a repricing we certainly saw. It was a pretty dramatic repricing, and we saw it most dramatically reflected in the Aussie dollar versus the US currency. So if I just bring up the Aussie dollar versus the US currency, this is what it looks like trading in the last 12 hours. And you can see 1 p.m. when his speech was made and those comments were made, we saw the Aussie dollar shooting up. So pricing in that expectation of an interest rate hike in the next couple of months. Of course, rising interest rates does tend to be a negative for the stock market. So if we have a look on the intraday graph of the ASX 200 and see what type of effect we saw at 1 p.m, you can see that the market did go down to the lows of the session before recovering over the next couple of hours. So altogether, Glenn Stevens' speech, great news for the Aussie dollar. We saw it shooting up on the back of his comments, but a negative for the stock market. And I guess that's one of the reasons why the Chinese and the Australian stock market has underperformed, because we have seen interest rates rising over here, while the US and the Japanese market have been doing relatively well in the last couple of years. And in fact, if you have a look at the Nikkei over the last 3 decades, it's an interesting exercise just to follow it together with what they've done in terms of monetary policy, in terms of stimulus, because the Japanese Nikkei has really just lived and died together with some of the stimulus and the easing of or the rising of interest rates and the direction that interest rates are headed in. So it does have a huge impact in terms of the stock market.